Hello everyone, I hope you're doing well. Today we'll talk about why you should invest in cryptocurrency. But first, let's define what cryptocurrency is. Cryptocurrency, sometimes known as crypto, is a type of online payment that may be used to buy and sell products and services. Many businesses have created their own currencies, known as tokens, that can be exchanged for the goods or services that the business offers. Consider them to be arcade tokens or casino chips. To use the good or service, you'll need to convert actual money for cryptocurrency. Cryptocurrencies are based on a technology known as blockchain. Blockchain is a decentralized technology that handles and records transactions across numerous computers. In 1991, Stuart Haber and W. Scott Stornetta introduced blockchain technology by introducing a simple computer solution for time-stamping digital documents to prevent tampering. Blockchain technology has the potential to become a global technology in the future, so keep an eye out. The security of this technology is part of its attractiveness. According to CoinMarketCap.com, a market research website, more than 15,000 different cryptocurrencies are publicly traded. Cryptocurrencies are still on the rise. On December 17, 2021, the total worth of all cryptocurrencies was over $2.1 trillion, down from an all-time high of around $2.9 trillion just weeks before. The overall market value of Bitcoins, the most widely used digital currency, was estimated to be around $868.7 billion. The basic goal of cryptocurrencies is to solve the problems of traditional currencies by giving currency holders power and accountability. All cryptocurrencies follow the 5 qualities and 3 functions of money. They're all attempting to fix one or more real-world issues as well. Cryptocurrency is a form of money that employs digital files as its medium of exchange. The files are usually constructed in the same way that cryptography is the science of hiding information. Digital signatures can be used to keep transactions secure and let others to verify that they are legitimate. To purchase cryptocurrencies, you'll need a wallet, which is an internet tool that stores your funds. In general, you open an account on a cryptocurrency exchange and then use real money to purchase cryptocurrencies like Bitcoin or Ethereum. Why should you invest in cryptocurrency in the first place? 1. Cryptocurrency is rebellious in a good way. Bitcoin's contribution to progress will never be forgotten, and the technology that underpins it may be tweaked to fit any situation. A succession of unstoppable servers are used to complete a cryptocurrency transaction. BitTorrent, the file-sharing protocol created by Graham Cohen, has been around since 2001 and hasn't lost any of its popularity. BitTorrent was the first decentralized application DApp to provide an online platform for sharing, uploading, and downloading files. Bitcoin was created using a revolutionary technology called blockchain technology, which is only becoming better with time. 2. There is no taxation. There are no taxes associated with Bitcoin because there are no intermediaries or third parties involved, and the transaction cost is lowered significantly. 3. Flexibility. You can send and receive money from anywhere in the world using a cryptocurrency. Because the transactions are purely digital, Bitcoins can be used at any time. The crypto world has no boundaries, and it benefits its users as a result. When you use cryptocurrencies to make a transaction, you have complete control over your funds and are not subject to government meddling. There is only a peer-to-peer network set up. A public ledger of transactions is maintained using blockchain, which ensures complete transparency. 4. Enhanced security. Cryptocurrencies use blockchain technology, which cannot be counterfeited, hacked, changed, or manipulated. Cryptography is used to process Bitcoin transactions, and once cryptocurrency has been transmitted, the procedure cannot be reversed. The finest thing is that all transactions are fully visible. There is less human participation, which means fewer, if any, errors, and it is a great banking alternative, especially for persons living in unstable or poor nations. Additionally, those working overseas who need to send money home can do it immediately rather than waiting days for funds to clear when they are in a hurry. Cryptocurrencies reduce the chances of being hacked. Unlike credit cards, which use a pull method, cryptocurrencies use a push mechanism, which allows the cryptocurrency holder to transmit anything without having to add any superfluous data. There is no need to provide your name at the time of the transaction or earlier. Digital wallet IDs function nicely with cryptocurrency. 5. With time, the reward per block decreases. Bitcoin has taken a lead of the mechanism that reduces the quantity of new Bitcoin issued by half every 210,000 blocks. When Bitcoins were first introduced in 2009, individuals were given 50 Bitcoins per block. In November 2012, the reward was cut in half, at 25 Bitcoins per block. This will continue, and the amount will be reduced again in the future years. The reason for the increase in Bitcoin's price and decrease in reward/block is that it is becoming more popular and usable as more people are eager to acquire it over time. 6. Trade that is adaptable. Cryptocurrency trading is extremely convenient and versatile. A credit/debit/PayPal or bank account is required to purchase cryptocurrency. Buying and selling cryptocurrencies has never been easier because to blockchain technology. The method of transferring and exchanging cryptocurrencies is also fairly simple. One thing to keep in mind is that the transfer process is irrevocable. Therefore, it should be handled with extreme caution. 7. Inflation resistant. When utilizing a fiat currency, the danger of inflation is always changing. When the government continues to generate more fiat currency, it can be used at any time. However, when it comes to cryptocurrency, it is devoid of any government control, which means that no such behavior may result in inflation. Another point to consider is that supply, or the amount of Bitcoin or any other cryptocurrency produced, is limited, which helps to sustain its value. 8. Rate of acknowledgement. When we look at the history of cryptocurrencies, we can plainly identify the differences that have occurred since their inception. The usability of cryptocurrency has increased to the fullest level, and this cryptocurrency has now fully stabilized, and its value is still increasing with time. 9. Transactions that are quick and easy. Complication is decreased in Bitcoin transactions because, according to blockchain technology, all transactions can be recorded in one place, which is a public ledger. In addition, as compared to traditional bank transactions, blockchain transactions take less time to process. The best part is that you can conduct these transactions at any time of day. 10. The cryptocurrency bubble has already popped. Many commentators said in Q4 2017 that the virtually exponential rise in the value of Bitcoin and other altcoins was unsustainable. It was in the end. However, we've witnessed a big correction followed by a period of sluggish stability this year. Weak hands have been shook, investors have become more wary, and restrictions have been more explicit. Investing in cryptocurrencies now is far safer than it was in the fourth quarter of 2017. For example, even if your profits aren't as fast or thrilling, the chances of you losing a lot of money after purchasing Bitcoin are significantly lower. There's a lot more information out there. It was difficult to obtain any information on many of the projects 5 years ago if you wanted to participate in the crypto market. Cryptocurrencies were formerly a fairly subterranean phenomenon. It's a very different picture now if you want to invest in crypto. More importantly, scammers are being uncovered much faster than before, making it more safer to invest in cryptocurrencies right now, as long as you use the knowledge accessible to you. 11. It is not past time. People are often told that they are too late or have missed the boat when it comes to investing in cryptocurrency. This simply isn't the case. Bitcoin is unlikely to expand 20,000 times in value in the next 8 years, as it did in the previous 8 before plummeting, but investing in crypto now puts you among the early adopters. Cryptocurrencies have a long way to go, but their value will rise as acceptance rises and people recognize that they are here to stay. Just because your portfolio isn't increasing by 30% every morning doesn't mean you're investing too late. In fact, it shows you're investing at the correct time. 12. In the crypto market, there are no more weak hands. The cryptocurrency market and typical cryptocurrency investors have evolved since the big bull run and subsequent crash, correction, and stabilization during the last 12 months. One of the most perplexing aspects of the Q4 2017 bull market was that you could invest in any coin, regardless of its utility, and still make money. Of course, this kind of craziness drew in investors who did no homework and gained a lot of money, and then panicked and sold, even if they were holding onto solid investments. Why? People were so used to everything going up every day that if one of their assets dropped down a little in a day, they panicked and sold. The weak hands have most likely exited the game, and those who have remained have learned when to sell and when to hold. At the very least, this is going to be a game changer. 13. The blockchain technology is here to stay. If it isn't evident by now that blockchain is here to stay, investing in cryptocurrency may not be for you. Many of the initiatives we see today will be abandoned because they don't provide a viable product or provide a working product with no real-world use. However, there are a number of blockchain projects that are here to stay right now. This is great news. Financial institutions are also getting involved. Because blockchain technology is still in its infancy as a viable technology, it's vital to understand that not all initiatives will succeed. Please consider subscribing if you want to see more videos like this.